Welcome back to the Daily Nugget. It's day 23 of 365, and just reflecting on this past series of insights from the 1 hour range observation, the lot that I kind of uncovered in the process that is leaving me with more questions than answers. Because something I also noted, it was often the case where it was actually unclear as to why the 1 hour range didn't hold. And when I zoomed out, it was in those periods that the high time frame began to correct in those moments of uncertainty. And so that got me thinking that sometimes what's happening now may not be for the current move, i.e. price forms a high, comes down lower, trades back towards that high, struggles to break the high, and then starts to trade lower. Even though we are on a 1 hour range and we should technically reach that equal high, that's a clear sign that there's not enough liquidity to breach that high at that point. And so what does price have to do? It has to retreat. It has to collect more sell orders to pair those with additional buy orders to be able to generate the liquidity to create an imbalance that trades through the sell orders that almost created a resistance or a barrier. And so when we get those moments where price is unclear or uncertain, it's okay to know that you don't have to know what's happening at that moment. And that may be a sign of where you should technically just take a step back and not try and force anything on the market, because the market is still trying to find its feet and determine which way it's going to distribute based on the order flow. It's never the mechanical steps in your plan that lead to the most growth or the most value. Those provide you with a great framework, but you have to be very attentive as a trader. You have to pay attention to what the market's doing, how it's developing, which way liquidity is being generated, because more often than not, it's showing you that. It's rare that at any given moment you have the exact same set of market participants behaving in the exact same way. And so you cannot expect the outcome for each trade to be the same. Something I mention a lot is staying in flow with the market and open to those pivot trades where your bias may be long, but until price gets into that entry area, the bias is going to be short. And are you able to capitalize on those shorts into that area? By the time price gets into that demand, how has volume or momentum shifted where now there's a high probability that price is going to break through that area? All things like it's about staying in tune with the market constantly and not having a fixed idea or bias on what the market is or has to do. So remember, guys, consistency is a choice